Welcome to Your Money Counts, a podcast by Marquette Savings Bank. I'm your host, Sean Fedorko. When you're buying a home, there is a lot of paperwork involved. What's necessary, what's merely helpful, and what's superfluous? And really, why does a bank even need all this information? Well, loan officers from Marquette Savings Bank are here to tell you what paperwork you need and why it's important. But before we dive into the substantive questions, we're going to ask, something to get to know our bankers. Today, we'll have them introduce themselves, and we'll hear where would be your dream vacation.
My name's Angela Diver. I'm the branch manager of our Liberty office here in Erie, and where I would really like to vacation is Hawaii.
Have you ever been?
No.
How long have you wanted to go?
Like forever.
Okay.
Sign me up tomorrow, right?
Yes.
Tricia Snook. I'm the manager at the Sterretania Street office, and I think my dream vacation would be Fiji.
Like hop all the islands?
Sure.
Okay, I like it.
Somewhere warm, sunny, and with a drink in my hand.
Okay, see, that's important. Yeah. Okay.
My name's Jennifer Bond, and I am the manager of the Peach Street office and a loan originator there. And I would have to say I would go any place warm where the water's turquoise blue.
Oh, I like that. Okay. So
I'm not picky. I would go anywhere.
Warm water destinations.
Yes.
Okay.
White sandy beaches. What about you?
Oh, me? Oh, wow. If I was to take a vacation, mountainous cabin in the woods, big conifer forest next to a glacial lake where I had a kayak, cabin, steaks, bourbon, and books.
Wow,
Sounds
you have
great.
that all planned
I'm
out.
ready to go. I've been fantasizing for a while. Yeah.
Lined up.
No, but one day, hopefully in the future. First, gonna buy a house, and we're here, of course, to talk about getting mortgage applications, other types of loans. So let's talk about that. I know that in order for a mortgage to be processed, you obviously need a lot of information from me, or from anybody coming in. What legwork should that person do before they come talk to you? So before they come and get a mortgage application, what should they have ready?
Okay, so if you've already looked for a home and you've already have a sales agreement in place, then of course that would be primarily your first thing that you would want to bring if you're purchasing a property. And then once we kind of feel out what your current income situation is, then we would guide you as to what you would need to bring. So if you work just a standard job that gives you some pay stubs and W-2s, then we're going to look for some current pay stubs, your W-2s and tax returns. And then we're going to look at where do you have those assets in place to cover your deposit and closing costs. So we may want to look at some financial statements that way as well. And then it can get a little more complex just depending on your income situation. So if you're self-employed, or if you're doing Social Security and pension and things like that, then we would go in another direction as far as what we would ask for.
So is this gonna be more than what I have to bring in for pre-qualification?
Yes. So pre-qual is a little more informal, where we kind of take what you tell us, and then when you come in to apply, that's when we need those firm documents to prove you do indeed make those amounts.
Okay, you said you're gonna look at my assets. So does that mean does it matter if I have a 401k? Does it matter if I have bullion stashed in a safe at home? What assets are you looking at?
So when we look at a customer for qualifying, we are required to ensure that the customer has not only the funds to close for their down payment and closing costs, but in addition to that, we need to make sure that the customer has cash reserves available. So in the event if their income was to stop, if someone was to lose their job, that they'd be able to continue to make their monthly payment each month, because they have other funds in a checking or savings or
So what you're guarding
investment.
against is making sure that people aren't put kind of on a knife's edge and they could fall off at any
Correct.
moment. You want to make sure that if I buy this house, I'm not putting myself in a precarious situation.
Correct.
Because, of course, your goal is to make sure that people can keep the house, keep making payments, which is helpful for you. But, that they themselves are going to be well cared for in the event that some shock happens.
Correct. Because we don't want to take the house back. We're not in the business of taking people's houses back. We're in the business of helping a customer purchase their home. And So again, we want to make sure that we aren't putting someone in a situation where if something happens, if they lose their job, if they get injured or something like that and can't work, that they're not going to have a steady income stream to make their payments. They'll have the assets, like Angela had said, they'd have those to fall back on, whether it be, a retirement account or investments, mutual funds, things like that.
So what are some of the documents? So I'm going to get a list going here. We got W-2s. We got pay stubs. What else?
For those assets that Jennifer and Angela both mentioned, we're going to ask for 2 months of your most recent bank statements.
Okay. Bank statements. And that's for like every account that I've got?
Checking and savings.
Checking and
Money
savings.
market.
Checking, savings, money market. What else might I bring in? Like tax returns?
2 current or 2 the most recent years federal tax returns.
So my last 2 tax returns. What else?
Asset statements. So the asset statements are different from the bank statements. The asset statements would be like if you have a 401k, a mutual fund, annuity, something like that, that would be considered an asset statement. And we just need one of those statements.
Most of those aren't monthly. A lot of those are quarterly. So your most recent quarter that you would have received.
Okay, so most recent quarter. What about if I own like physical assets? Like I own some land, or I have like 3, kind of sports cars or something, or I've got a boat, or I've got 3 boats, a plane. What about these assets?
Sorry. We would note them within the application as assets, but we wouldn't require you to bring in documentation to
I don't need,
support
like, my
that you
title.
own those.
No.
No.
Okay, do you even have a title for a plane?
Probably. It's
Yeah,
probably
probably.
titled. It's probably
Yeah,
a titled.
you got to prove who owns it. Okay. I don't own a plane. No, I mean, I could one
Yet.
day. Yes, thank you. See, that's aspirational. That's what I like.
We'll fly you to your mountainous
Fly to my
vacation.
mountain retreat.
Right.
Let's see. Well, that sounds, it's a lot of paperwork. What else? Anything that would be helpful? What about identification? Can I bring a passport? Do I need a passport? Do I need a birth certificate, social security card? What other kind of stuff?
Government issued valid ID. So ideally a driver's license or a PAID card. Or if you're moving from out of state, as long as it's a government issued valid identification driver's license or a passport, that can be used as well.
And let's say I'm buying this home, small family, and I've got a spouse, all of this stuff for both of us.
Assuming you're both on the application.
Okay, we're both on the application.
Yes.
Need it for both of us. What if I'm buying the house, my spouse isn't? It's going to be in my name. Do you take into account that this is a dual income household? So as you calculate kind of those assets, or do you treat it just as me independently?
The income's going to be just for the individuals that are on the application.
Okay.
Whoever's listed as the borrower, their income and their assets can be taken into consideration in qualifying.
Okay.
If somebody's not listed as a borrower, then we can't use their income and assets.
So it's a whole lot of paperwork. Obviously, it's pretty easy for me to pull that all together and carry it in. Can I do this online? Could I submit this stuff if I have it as PDFs or enter the numbers online?
Yeah. So if you decide to apply right directly through our website, you'll actually electronically sign most of your documents, and then we will actually email you for a few additional things that we would need for you to send, which you could certainly send in PDF form as far as those pay stubs and W-2s and things like that.
And we recognize that not every customer is comfortable with applying online, so we have options available. If some customers are comfortable applying, if a customer is comfortable applying online, then we have that option available. But a lot of customers still prefer to come in and sit down face to face and meet with someone to talk about everything and to do the application in person. So,
and I could switch halfway through. So I'm
Oh,
halfway.
yes.
I've been doing this
Correct.
online, and you've been sending emails. I've been sending supplemental documents, and I think to myself, I'd really like to just sit down and sort this out. I can call and say, or even walk in, but ideally, I guess I'm probably going to schedule an appointment, and I could just come in and talk to you then.
correct.
Right.
And that
I think
happens
it's
frequently.
I was going to say, I think it's important to note too that you bring everything in and we collect at one time. I had an application yesterday actually where the customer asked me at the end of the application if evidently they were told by someone else that they would probably have to bring the stuff back in a second time. And I, told him, nope, I've got everything here. I'm going to keep a hard copy of everything until your loan closes. There's no reason you should have to present things more than once.
Right. In another scenario, like you mentioned there, you may want to get things started and not have all of this documentation printed or available electronically. It doesn't mean that you can't come in and get your application started. We certainly prefer to have as much information as we can to get things going, but we understand that there might be a scenario or a situation where you don't. It doesn't mean that you can't go home that night and then send it to us in a PDF or stop in, a week later and bring it to us.
Well,
in order to keep the ball rolling, we prefer to get the material as quick as possible, but we understand that it might not all be readily available at that moment.
And to Trisha's point, I met with a customer a couple weeks ago that had the list of information, but forgot to bring the envelope from home. So we still met, we did the application, he signed everything, and then he dropped everything off at a later time. We made copies and returned it to him. So it's helpful if the customer has it, because when you're entering the income information on the application, you want to use the most accurate figure as possible. And when you have a pay stub in front of you, you can look right at it and calculate it. Excuse me. But we can go back in and update those figures. If the customer thinks they have $2,000 in their checking, but when they bring their statement in, it's actually $2,500, then we can just go in and update it. So, nothing is cast in stone. We can adjust those things as we need to.
Right. So, we're talking about what sound like pretty typical cases. I'm a full-time employee. I've got salary and benefits. So I've got a W-2, I've got pay stubs, I've got a savings checking. What if, as is the case with many of the millennial generation, I'm a freelancer or I've started my own small business. So maybe I'm taking owner draws out of my LLC, or maybe I'm a 1099 contractor, so I don't have any W-2s. Tell me about the kind of documentation I suppose it would be more onerous, right? Because it's not as predictable as a W-2. Talk to me about the case of a contract worker who's primarily receiving 1099 payments.
So someone that's getting 1099 is typically filing a Schedule C, I'm guessing. So we would want to look at tax returns at that point. So we understand they're not getting a regular pay stub and they're just going to have those bulk amounts throughout the year. So we typically want to look at 2 years tax returns, and then even possible a personal financial statement if they have one. If they don't have one, we can provide them a form to fill out so we can get a good feel for the stability of their business.
So, and for the audience at home, who aren't familiar with 1099 would be like a contract or a gig worker. If I've taken a 3-month contract as a writer or am doing some software development work, I might receive pay and I'm going to have to record that to the government. It's going to be a 1099 report. But tell me about this personal financial statement. What is a personal financial statement?
The personal financial statement is basically like a snapshot of your personal portfolio. So you would list, you do list some of your asset information on there, and you list all of your income and believe the projected income for that year as well. So we can kind of see where things are right now with you and your business. Because maybe 2017 wasn't a better year for you, but in 2018 business ramped up, and so far in 2019 or 2020 it's doing better. So we want to have a good picture of the income and how it's changing.
You might even have, depending on how far you are through the year, you might even have a profit and loss statement that you would be able to prepare for the current year, so that, like Angela said, with projections, you might be able to see 2017 and 2018 in tax return form. But then we can see where are you going for 2019 by asking for a current profit and loss statement.
So thinking about a profit and loss statement, let's move from maybe the freelancer or contractor into the small business owner. So maybe I've got a small business. I might even have a couple of employees. Maybe those employees are W-2'd, but I'm still taking owner draws. I've got my P&Ls, I run every month and I kind of show the financial health of my business, but I don't even have sort of a monthly 1099 to give you. How are you evaluating the financial viability of that individual who may have, tens of thousands of dollars in assets within the business, owned by the business, and may have a healthy, thriving business, but doesn't have as much of a documented, consistent income?
Well, I think that in some cases where if you have a contract with a company to do a job, typically your contract and the information that you're disclosing is in most cases verifiable with the copies of the bank statements. Because if you contract with a company to get paid, $5,000 for a job that you're going to do, there's typically an offset where you see the deposit going into your account, and you can provide copies of the checks that you've deposited if they've paid you, or if it's a direct deposit, you may be able to offset that to verify it that way. Whereas with pay stubs, it's a little bit easier.
Obvious, yeah.
Exactly.
So is the financial health of my small business going to influence my ability to purchase a home, or is it purely the amount of money that I'm taking home out of that business?
If you are self-employed, then we typically ask for 2 years of personal and business tax returns if you have more than 20% ownership interest in the property.
So if
or in the business, I should say.
More than 20%, you're going to ask for the business tax returns too.
Correct.
Okay. Then, we've talked kind of about one extreme, sort of a W-2, regular employee. We've talked about kind of self-employed, either contractor or business owner. I imagine you see blurred or combined cases, right? Where I have some W-2 employment. Maybe I am full-time or part-time employed. But the other thing I'm doing is contract work, or maybe I do have kind of a small business on the side that I'm trying to get going. So you'll combine all of these into a much more complicated, calculation about my financial health.
Right. And, one thing that we all see a lot of that we haven't even mentioned yet is a lot of customers have rental properties. And are drawing rent from those rental properties. So, in the case where someone is a landlord and they have rental properties or investment properties, that would be another case in which we would want to get, the last 2 years worth of tax returns to see, the income that they're actually drawing, what their true net rent figures are that they're earning on these properties, because there are expenses that come along with those properties.
Right. In addition to that, we may ask for the current leases as well. So it would show on the tax returns, but it may be beneficial to have the current leases that you have signed with your renters at that time as well.
Okay. Well, is there anything else we've missed? Anything we haven't covered that would be kind of crucial for somebody to consider as a document they'd want to get in order before coming in and seeing you?
Angela mentioned the sales agreement. So a fully executed sales agreement, which would be the buyer's signatures, the seller's signatures, that everything's initialed and signed off on by all parties, a copy of the deposit check. When you make a deposit on the sales contract, you have to give them a deposit. We would need a copy of the deposit check. Valid ID. I think.
Blood sample.
Right. Yeah.
Firstborn.
Right.
Fingerprints.
Right. You will pay for, when you come in and do the application as well, you will need a form of payment to pay for the credit report and the appraisal fee to get that process going. We can accept payment in pretty much any form: cash, check, debit, or credit card.
Okay.
Pennies.
Bitcoin?
Right. Correct.
Does Marquette work with
No.
cryptocurrency?
No.
Holy cow, okay,
Are you
okay.
saying yes to the pennies?
I was saying yes to her pennies,
pennies,
not to your
okay.
Bitcoin. Right.
Right.
Well, I think that helps our listeners get a pretty good list of everything they might want to pull together, regardless of how they're earning their income, to get ready for coming in and being prepared for their mortgage application. Well, that's our show today. I want to thank you all for joining us. To learn more, you can go to marquettesavings.bank. And there you can schedule an appointment online to talk to one of our loan officers face-to-face or over the phone. Your Money Counts is a podcast brought to you by Marquette Savings Bank, an equal housing lender and a member FDIC. We look forward to you tuning in to continue learning more about how your money will count. Have a good night, or morning, or afternoon. I don't know, whenever you listen to this.